Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We are going to have plenty of time to talk about some of these things, and there's a lot of things happening. Some of these prices that we're seeing, 1177 was the low in silver, and there is, I think, Pete, things are going to be okay. I mean, we're just in a period now where the news, they've blown this thing a little bit out of proportion with the fear thing. I mean, it's really a shame what's happening, actually. I mean, they're good reporting and stuff, but frankly, folks, stop and think. You know, we lose. I don't have time to answer that. If we lose about 1,300 people a day die of smoking. That's 48,000 a month. Die from 48,000 a year. We lose another 60,000 to the regular flu. So this is going to happen. What they've done here is really just scared the heck out of everybody. You know, well, I'm not sure about that, David. The dogs and cats will go first. So there's not much else that we can what we can do about that. I gotta. Just a second about that. That's Mr. Powell calling me to see what he should do next. Folks, last night when they dropped the interest rate like that was a flat-out no-brainer. I mean, that was you could see that coming a mile away. What you have to really be just a minute. I can't do that. People are panicking everywhere, and they think I have the answer, which I don't. Let's move on here to try to talk here just a little bit here about I don't know how to mute the ringer. I wish I did, but I don't. So sorry about that. Okay, let me move on to the thing here. Where to start? Okay, I turned the phone off. Yes, okay. Sorry about that. We live in unusual times. All right, let's move on to the markets. What we're seeing here is a normal what's happening in the market, folks. In my opinion, it is this is what's going on here was relatively predictable. I covered this in the newsletter over the weekend. I think I focused on one particular stock, and this is the one I'm going to show you, and it is Apple. And I wrote in there, oh, shucks, there it is. I hope it's the right one. I hope that didn't post wrong. Oh, dear. I don't know how if it posted. Let's see if it did okay or not. I'm not even sure, but I hope that's the chart that posted for Apple. Nah, shucks. Boy, I just screw up on one car view. There we go. Yeah, there's the Apple. And we're going to open below there, folks. I know it's hard to believe Apple being down 12% in one day, but that's going to trigger something quite negative, in my opinion. So we'll see if that's the case. Now, let's take a look here. Let's take a look here at the E-mini, because that's the one that's really been telegraphing really what it wants to do. If you remember, we were on last week talking about this. Just, boy. Hold on just a second here. I got to get this up here. Here's where we were on Friday. This is where we were. We were talking about this because the market just kept repeating. Now look at this, folks. This is going back to February the 20th, when it made the high up there at 3,300. You see how it broke hard? And then between the 28th and the 3rd, we had that 50% correction. That's when the Fed came in and dropped rates the first time. And then look what happened. We came down and we rallied up last Friday, right on the close. We rallied right up to the 38% retracement of the high of that. And the Fed came in again. And what happened again? Boom, down again. That's pretty much what's been going on. Now, if we take that one step further, and hey, this is just a technician talking, boys and girls. I'm not I'm not anybody to look at. But let's just blow this up and just take to see where we could possibly be here, because we are going to take out that point C down there at 2380. Probably not today. Well, it could be today, because if these limits expand like they say it is, then that's what we're watching. So we need to watch that. But if you look at this tells us on this swing, and I'm not sure about the day here. I'm not sure about the 20th of, that's Friday. It could be, the way it's going down. But that gives us a price objective of 1935. Now, that's down quite a bit from 33.85. So that's pretty much what we're looking at here. Hopefully we'll start trading here pretty soon and get some pretty nice swings like we've had through here. We've had these 200-point rallies, and of course, 200 points isn't that much anymore, so we need to pay attention. The real interesting one, of course, is the currencies are really, it's same thing happened here, Peter. Everything came to a stop within 24 hours. All the stores are pretty much out of most of the stuff, but see what's happened is it feeds on itself, folks. Now, some people have asked me by email and by telephone if I've seen this before. No, we haven't seen anything like this before. If we go back and look at the let's just grab this up here. This is from one of our listeners, and we'll be up here, come up here, take a look. This was the Spanish flu. You can see here at 1918. That's when, and it had a 27% drop in the Dow Jones. But folks, I want you to remember this. This is 1919 is the low here. Okay, now look on the far left over there. You see where it says 96, folks. The high on the Dow Jones just 10 years later was 383. So this is going to pass, and we're all going to be okay. This is going to be a great opportunity when we finally get to that spot. And I'm not sure when that spot's going to be, but there's going to be some fabulous deals. I mean, I think silver under $12 has got to be a pretty good thing. But who knows? Let's just take a look here at one other one that I wanted to go over. And I wanted to show you the market between 1918 and 1925. You'll notice here that the Dow gave up 50% of its value from the time the flu began till the time the flu ended. That was a 50% drop. So 50% drop from where we were would take us down to about 15,000. In the Dow, and people are saying, well, that's the end of Mr. Trump. Yeah, but you can't extrapolate that, folks, because if not too many people die, he could be viewed as a as a savior to this. I don't know. Hey, folks, we're in a quarantine, right? Friday and Saturday in England, they have their big races, okay? Those are the horse races that are coming out. And the horse races, they have 200,000 people. Now, you would think nobody showed up, right? It was sold out, and everybody showed up. 200,000 people in the midst of a quarantine. They were out there doing, that's not very smart. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, Sunday morning early, I sent out a video about the precious metals showing this chart here in the gold market. And I said, this has the potential to be very, very bullish, but if we go below $1,500, be very, very careful because it could really get very, very nasty. And the reason why is that XAU chart that I posted, the fact that we couldn't get any higher than the 382 on the weekly chart when we made the 78% level in gold. I mean, this is not a very good sign, and silver was lagging badly. It went exactly to the 78% level at 1975 and has given back $7 an ounce, folks. We hit 1177 this morning. And, of course, the one that had been acting the worst, which has been the platinum. And take a look at platinum last night, folks. You're not going to believe this, but platinum has been halved in 3 weeks. We went from 1050 to 960 in 3 weeks. No, it's been 2 months. In 2 months, that is a heck of a lot. You can see the 1.618 expansion down there at 560 some dollars. So we should be some type of a bottom here in these metals. That's my 2 cents worth, and believe me, you're going to be overpaying if you pay the 2 cents. So let's take a quick look at the silver market, because it hit a very interesting number here. Now, this is the long-term weeklies on silver, and if you'll look at this, why this is important, if you'll look at the high up there at 1975, you see that 78% level? Remember how the open interest was dropping, and we were talking about that, the same thing in gold when it was up there around 1690, 1700, open interest dropping? That means that buyers are leaving, and you can see what's happened now. We went down and we made a 1.27, folks. That's a giant ABCD down there at 1177. And so this could be a major bottom in silver. I am not recommending a buy in here. I'm a little bit more risk averse than most of you, so I would wait for a day or so we can get a nice little pattern near the bottom and not have to risk an arm and a leg here. Because look at the steepness of these moves. I mean, you don't have to be a rocket scientist to figure out that that's neither here nor there as far as being very, very nasty. The problem that I see it is the Federal Reserve fired their last really they've got a lot of stuff they can do, whether it helps or not. But when they fire a big gun, like $700 billion in repos, and then drop interest rates by 0.5%, to me as a trader, that was a sign of intense fear, especially when you could see what was happening to some of these other markets. Now, let's take a quick look, because this is what was really interesting about the gold market last night. I was able to I was working with Tom a little bit, and Tom Hugard, and we were watching the gold, very, very closely, because it was acting like it was going to have one heck of a move, but in fact, it really didn't do what we think it was going to do. Let's just get this up here. I think this will be it. Yes, here it is. This is the one I want to watch. Now, pay attention to this chart, folks, because I think it's really important. Look at the $1,500 an ounce level. That's where we were on Friday. And then the Fed comes in this morning, drops interest rates, and you see it rallies up exactly to the 78% level. That was up $78 from the bottom, from the high that we made at 1608. Okay, then notice what happened. It came down, and then it rallied up, and you see that dark black line right there. That was the 135 pattern that we were watching, because once it broke the 1529 level, I mean, it went straight down. I mean, there was just no heat at all. I mean, it just kept going down, and it looks like we're going to get to around 1440 is the way it looks like on this one right here. So, and remember, this is only a 15-minute chart, but that's what I try to do, is to look at these on a little bit shorter time frame, so you don't have to risk very much, because buying it, I thought silver was going to be a pretty good buy at 1440, but silver went right down to 1442 yesterday, and then when the Fed came out this morning, it rallied 65 cents, and no sooner that had rallied to 65 cents, it gave half of it back in about 10 minutes. Boy, that's really bearish action, folks. And then the rest was history. It just kept breaking and breaking and breaking, and that's neither here nor there. If you have any questions, it's 877-927-6648. Hey, look, I haven't gone through anything like this either. This is this is a major, watershed or black swan event. It's, not very predictable, but, you're going to hear all kinds of news out there. Most of it's not going to be anywhere near accurate, but most of us will get through it. But you have to use some common sense, like they're telling you to do. Stay inside. You don't need to go into big places, where you have 50 people or more than that, and that type of thing. See, that's why poker is so good. There's only 10 people at the table passing these little petri dishes out every minute and a half. That'd be the last place you want to be during these times, is at a poker table, because everybody they're usually touching their face or moving the cards around. That would be, and yet the casinos are open, believe it or not. The MGM in Las Vegas is closed, probably some others too, but they're going to be. I really think the Treasury bonds is the next one to go after this, folks. Remember the flight to quality in gold? Nope. And I think the next one's going to be the Treasury bonds too. That's the one. The one that's going to get really, really decimated here will be this one. This is the let me get this one up. This is the high grade bonds. These are the fractal guys, the oil business guys. Look at that. I don't know where we're going to be this morning, but this is going to be, pretty negative in here. But again, we're seeing in the Treasury bonds, we're seeing dropping in open interest up there on these rallies. And remember, here we had a 0.5%, almost a zero, and the bonds rallied about 5 points and gave 4 of that back last night. So, I mean, they're not acting that bullish either. So, at times like this, you never know what the flight to quality could be. Maybe it's cash. The most interesting thing to me of all the trading that's happened last night is how quiet the foreign exchange markets are. They're very, very quiet. The euro's been trading just exactly like it should be. The dollar strengthened up a little bit. The yen had a big move, pulled right back exactly to the 61% retracement last night. I mean, it was very, very regular in this market. So that's what I see. So I don't know if it means a whole lot or not, but we're not at the bottom of the stock market. That's going to take a few days, and probably I don't know. My guess is maybe 1 or 2 more days, and and then they're going to be like a 9/11. Because stop and think, folks, in 9/11, we didn't shut the whole country down. It was only for 5 days they had the airlines shut down, and then the market finally got back to everything, and then we'll be able to see it. The data from China has to be bad because, they've got hit quite badly. But, the factories are working in China now. People are back to work. We're hearing that from our friends in Hong Kong, and so that's it. I do want to cover the domestic airlines and all that stuff because we can't lose an airline or an industry like the travel industry, folks. That's not going to happen. They're going to do something to change that, and it might be a holiday. I don't know what it's going to be, but they're not going to let that happen. I don't think so. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're having some rocking and rolling here in the market. I guess we're going to open here pretty soon in the old S&P. Let's get this up here to see if I can finally get some prices here and see if we're going to open. Well, it looks like we opened down the limit at 21,335. In the we got 25,0150 in the S&P. It looks like that was down another 100 points. So that's pretty much. We'll see whether whether we'll open here a little bit later on, and we'll go from that level. So we'll see what happens here. Any questions, folks? 877-927-6648. Like I mentioned before, I thought the currencies were acting relatively well. And I think that we're going to see, yes, Shane is calling in. I was hoping we would get him in here. So hopefully if he gets him in, we'll chat with him because he seems to be following this stuff quite well. And I'd like to get his feedback on this. So let's see if his, are you there, Shane? Not yet. It doesn't seem that nobody's answering the phone at TFNN. The crude oil is weakening up, folks. We're down about $3 a barrel. Supposedly, they're selling oil in the UK for $25 a barrel. Do you believe that gasoline, folks, traded at 69? That's a really big number, 69 cents a gallon. That means gas is going to be down about $1.50. We've got Shane on the line now, I believe. Shane, are you there?
Hi, Larry. Can you hear me?
I hear you perfectly, my friend. Great to hear from you. And can you make any sense about what the Fed is doing and what's going on right now? What is your thoughts on this?
Well, first of all, good morning to everybody and to you. So can everybody see the charts here?
I haven't been able to get them up, my friend. So hopefully we will be able to shortly. But right now, yes, I think we. I don't know if we have or not. So I'm really. I don't think we have the charts up. So if you'll post one to me, I will do my best to get it out to the folks, and we'll see if we can get it. So tell us, why don't you just start, and then we'll see if we can get these charts up, if we could, okay?
Okay, no problem.
And I know this was a spur of the moment, but thank you for coming on because, everybody's a little concerned, and frankly, I don't have the answers, and I'll let somebody else tell me what the answers are. Go ahead, my friend.
Well, first of all, the chart that I had here, which I guess I'll just read the chart. I'm sharing the screen here. Hopefully it'll come up soon. Is the coronavirus chart. We're up to 169,000 cases, and the number of cases are rising. Now, the one thing I want to point out is that this is a rolling effect, and this is an aggregate curve of many different countries. So China is flattening out, but the other countries are now coming online. And so one thing we have to understand is that this curve should increase because more countries are coming down with the virus. And also keep in mind that there's people walking around right now that have coronavirus that don't even know it. 80% of the people have mild symptoms. So you have 5-to-1 ratio, 4-to-1 ratio of people that don't even know they have it. And now all of a sudden you have these tests coming out that weren't available before, particularly in the United States. South Korea has done a great job, but the United States was lagging. So now people are testing, and all of a sudden the number of cases are going up, and they already had the disease. So that's one thing to consider. The other thing to consider is that we really need to normalize this curve, very similar to the way that you would do an RSI on a stock chart, because we need to normalize this by the number of countries that have it, and then the population per country of those countries. And then we would start to see a true value of what's going on. We could actually start to see it flattening out, because we got to represent this as a density function. Right now, this is just an aggregate of everything. So what I'm working on now is creating a density function for this chart, and it might actually be flattening out sooner than people think. We just may not be able to see it yet based upon what we have here. So that's just one thing. Like, in other words, it's rising up now, but like I said, it could be flattening out and we wouldn't even really know it just quite yet. So that's just something that I'd like to point out. Now, if we go forward to a week, this is projecting out to over 250,000 cases. I have two lines here. One of them is a 4th degree polynomial. The other one is 3rd degree. It seems to be modeling the 4th degree polynomial, but again, these curves can change, and they do change. And this is a highly fluid situation. Now, the good news is that people are acting on this soon, and we're coming up to these warmer months. Now, we don't know everything about the coronavirus, but we do know it's an enveloped virus, and enveloped viruses are very sensitive to high humidity, higher temperatures, and UV radiation. All viruses are sensitive to UV radiation. This is why you have UV lights that you wave over your bed. It kills bacteria, and UV light tends to cut and slice long-stranded molecules. such as DNA or RNA. So that's good. And so it's likely, this is going to help us, and there's a good chance that this could cycle down and then come back later on like the flu does. Like, could cycle in and out, and we could see it coming back later. It's like a typical.
Do you think this is going to be a long thing, like 2 or 3 years, or?
I think it could be with us for a while, but I think it's going to cycle in and out like the flu. I think that's what's going to end up happening. And the scary thing is we just don't know. It's like in Iran, the death rate is like 15%, and we don't really know why. And so there could be different strains of it. And that's the thing that's kind of scary about it, because we just don't know everything about it yet. So that's why it's important to be cautious with this. Now, the next slide up here is the Fear and Greed Index. And that's a measure of fear, and this is by CNN. It's a very good chart if your viewers want to go over and see it, the CNN Fear and Greed Index. And the fear and greed on Friday, even after the rally, was still down to 5, and it went down to a level of 2. That's extremely low. I think that's the lowest reading ever recorded on that. So when you're talking from a contrarian perspective, we are at extreme levels right now on this market. So just something to consider about this. Now, the next one here is the S&P call ratio, or put to call ratio, and that's still running at about 6-to-1, which is still very bullish. It's not as high as it was before. It was 15-to-1 at one point, but now we're looking at about 6-to-1 on that. So again, these are, I think, very strong contrarian signals. So that's just something to consider. And I know in times of fear and panic that people don't really look at these things, but if you want to remain objective with the market, you need to quantify these things, and you can. We can quantify them by the Fear and Greed Index. We can quantify them by the number of the ratio put to calls on these markets. So, just to start out with,
we have a question about the Fed. How much more can they do? I mean, they dropped rates to 0.5% and put $700 billion into the repo. What do you think will be next, Shane? Do you have any idea?
Okay, so that's a good question. Let me just go through this record stimulus. I have a slide up here. Can you see the slide that says record stimulus?
It'll be coming, I'm sure.
Okay. I have 10 things here I want to point out that there are still very, very bullish, very, very, very bullish signs in the economy before the virus hit. Now, again, this is kind of reminiscent to me of the flash crash. I know it's not the same thing. The flash crash was a technical error. But in terms of the economy, there was nothing really going on with the economy. You have this dislocation right now.
We'll talk about this. Yes, sure. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we're chatting with Shane Smolian, Wolf Trader. My friend, tell us what you have next about these 10 things. Yeah.
I'm going to go through the stimulus here very quickly because I have some other charts I want to go through. But it's, in essence, this is record stimulus. These are not empty gestures, and this is of an order of a magnitude higher than I've ever seen. And I just went through the list here. You had the rate cut at 0.5. You have the repo market. You have the QE4. Just on Friday, you had $5 billion in purchases. $5 billion just on Friday. Oil prices are effectively a tax cut. You have the next meeting coming up. You have a payroll tax coming up. That second cut that went to zero. They relaxed the lending standards, and then how I measure it, the daily and weekly Fed use are at all-time highs. In other words, they're just going to continue to pound this higher. So just keep in mind that these are not empty gestures. These are not just political statements. These are real things that are going to affect the markets. Now, going to the Planetary Speed Index here. Now, this Planetary Speed Index modeled the first decline. On the next rise up, this market was so powerful that the decline was so powerful that it still wanted to decline into that. But we are coming into some type of a low into here on the 22nd. We're coming up in just a few days. So we are still in a relatively negative astro period, but I think there's a good chance that the worst of this is over. And the market has a funny tendency to reverse after Fed decisions. So we got to watch this. Even if it's down today, the day after can tend to reverse in a positive direction. Now, one of the things I like to look at is relative strength during declines, and I like to look at companies. How do companies look relative to the market? And during panics, key companies like Apple tend to outpace, and on the bottoms, they tend to outpace to the upside. So this happened in 2008 when we were declining in the panic. Apple outpaced the S&P lower, and at the lows, Apple was outpacing it higher. So the next chart here this is actually the chart of Apple during the panic. This is Apple here, and the S&P 500 is up here. Down here, you see a relative line. This is a relative strength line of Apple versus the S&P. Now, you can see that during that panic, this is the Lehman panic, that Apple was actually falling faster than the S&P was. Okay, so that's the problem that we see in a real panic, is that the value of these bellwethers actually tends to outpace the market to the downside. Does that make sense?
Sure does to me.
Okay, and then the next chart here is going to be this is going to be in the March lows of 2009. Now, this is the same exact indicator. Nothing has changed. But what's happening now? Well, the S&P was making a new low, but look at Apple. Apple actually made a higher high here. You see this? And it was reflected in the relative strength here. So when we were making lows, the relative strength of Apple was higher than the S&P. So that's important, because what's going on right now? That's the question we want to ask ourselves, because if this is really a true panic, Apple should be headed lower. But what's actually happening is Apple is showing a good relative strength. In fact, it's showing stronger than 2009. Google is also showing strength, and JP Morgan was weak until the QE4 announcement, but now it's showing good strength. So this is the chart here of Apple. This is the actual relative strength of Apple right now. So if this was a panic, like if this was a true panic that I felt would continue lower, I would think that Apple would be outpacing this market lower, just like it did in the Lehman panic. But it's not. And you can see this line here. The relative strength of Apple is very strong on these markets. So, you know, the Apple did make a lower low, but the market went much lower. In other words, this looks like a double bottom, and the market doesn't even look like a double bottom. So to me, that's a good sign. You know, each day is different with this. We get new headlines every 30 seconds. It's something we haven't seen before. But if I look at the internals, this is a good sign. And if I look at that stimulus, this is a good sign going forward. I mean, we may be wandering around here for another week or so. And the Fed, and there's this huge tug of war going on. So shorting these markets is really dangerous because you could be short and then there's a new announcement comes out and it blasts straight up. And so that's just, it's very dangerous to short these markets. But this is looking forward when it starts to rally. I think this is good too. Look at Google. Google's showing a very strong relative strength to the market too here. That's a good sign. That's positive. That we definitely want to see that if we're looking for this to be some type of a low to get value on stocks. Look at JP Morgan. Now, this is the one that's important because JP Morgan has a very strong relationship with the Federal Reserve. Now, this chart here on JP Morgan was actually very weak from January going all the way into this March period. But then when you had QE4 here, notice that JP Morgan shot straight up. So now JP Morgan has a strong relative strength to the S&P. Now, this is as of Friday. Of course, today we're opening lower and we're halted right now. And again, this is a mess. The country shut down. This is not something that's just going to turn on the dime. But I think there are some encouraging, let's call these green shoots behind the scenes that are going on that I think these are good signs. And I'm going to monitor these every day. And I post these for the subscribers on Twitter. And I've been posting video updates much more often than I usually do because the situation changes so quickly with this. So that's just, those are just some things that I wanted to point out there. Now, this next chart is the weekly Fed juice. Can everybody see that?
I think we can get it in there. Yes.
Okay, I know I'm going fast here, but this is the weekly Fed juice. Now, this is the way that I measure it. And again, a viewer asked, what more can the Fed do? Well, I measure what the Fed's doing behind the scenes, and they're at all-time highs. This is higher than any QE period, and now you have this official purchasing. QE4 is official in terms of purchasing the treasuries. So I still think, even though this is a technical bear market, I still think it's a bull market on the long term. I think we have a very good chance that this can, recover and start to head back higher. My biggest concern is that sometimes these lower markets or negative sentiment that can happen can spur other things such as wars and things that can spiral from this. So that would be my biggest concern right now. But I think we'll get the coronavirus under control. And I think this market has a good chance to recover. I really do. I mean, I know, like I said, technically we entered that red square, which is the bear market territory. But I think long term, I feel pretty good about this market. I feel pretty good about our chances to make a recovery here. So when does that happen? Well, we could wander around a little bit here, like I said, but I have faith in this market, and I really hate to see this type of selling into here over something like this. I mean, it's just really, it's hard to see this, but
yeah, it sure is. We've never seen it before. It's because neither one of us were around in 1918. That's for sure.
Yes.
Wow. Hey, listen, thank you for joining us today on the spur of the moment, but it was really helpful to give us an idea, and also the positive feedback is very good because we will recover. We live in a great country, and we will make it through this. It's just going to be tough these next few weeks or months, so that's what we're looking for. You take care of those lovely children of yours and keep in touch with us daily like you usually do, okay?
Thank you, Larry. Thanks, everybody. Be safe out there. Stay healthy.
Shane Smolian, thewolftrader.net, folks. .com. Let's move on. We are trading freely now in the S&P. We hit a low of 2350. It looks like we rallied 50 handles, which is a burp now. That's 2400 last, 2399. So at least we're trading freely. That's a very good sign. Whether enough buying comes in to reverse all this, we'll have to wait and see. But keep an eye on this because I'll just give you my 2 cents worth. And believe me, like I said, it's overpriced at that. But watch the price of of a 24. Let's get this up here. Look at it. Would be 24.75. Watch that price, folks. If we don't get any higher than that, we are not going to reverse today. But if we get above 24.75, we've got a chance to have something nice happen, and maybe a reversal, and people will, put their shoes on and maybe not sell too much. So who knows? So we'll take a little break here. I think 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I wanted to mention a little bit more about the bonds. I really feel that that's the one that could be the most vulnerable, because that's the bigger market of all of these, and if it doesn't really get moving to the upside here after all this stuff, it's gonna look awfully bad, especially with this drop in open interest that we've been seeing. So we need to pay close attention to that also. Now, I did want to show you the low that we made back here on the Dow Jones here on Friday, you'll notice that we made this ABCD pattern. That was the CD leg was 1.414 of the AB leg, and of course we had the really strong rally of well over almost 1,700 points in the last hour or so, and again that was right at a major resistance area, and then of course now we traded below 20,000. So we are in a very severe bear market, but we are going to live through this. Just follow some common sense. Try not to get out in the public unless you absolutely positively have to, and make sure you wash your hands all the time. Don't touch your face. And those are just a few things that you need to do. And if you're old, just wish that you were younger. That's basically it. We'll see what's going to happen. I think it's best that for this we'll get over this. You got people in London that they're not paying any attention. Folks, they're going to events where there's 200,000 people. That's just not good to do that, given the fact that it is a little scary. This is different. This is a black swan event. Nobody saw it. Well, maybe somebody coming because you hear all the conspiracy theories and stuff like that. So we'll not worry too much about that kind of stuff. But we will continue. There's going to be great values, that's for sure. This is always the case. In the 2008, there were great values. 2009, 1987, and we're in that type of event. So we should be finding some support down here at around 1900 or so the next day or so, 2 days, 3 days, whatever it is. In the S&P 1955, that's what the value of it is, and we'll see whether it's going to make it or not, because it's very early. So thanks a lot, folks. Live every day in an attitude of gratitude, and may God bless.